numbers. But what about the market setup? Let's take it across to Kunal Bothra and find out what he's making of the market. Where is it that we head from here? Kunal, hi, morning. Yeah, you're ready. The struggle with 26K, Kunal, clearly continues. Where do we go from here?
Always ready.
Are we ready for 26K is the question.
So the question is that whether the markets are ready for 26K, I think it should be possible today. I think there's a very high likelihood. Global market setup has been buoyant. I think we're looking at a point where many of the global markets are just seeing a very strong positive follow through. That's a phenomenal, kind of a added data point because, our market internals have improved significantly over the last, 1 week or so post the, tariff agreement as such. I think from there on, we've seen sector in the front being a lot more positive. The FI data on the cash side being a little bit more positive as compared to the weeks and the months prior to that. On the FNO side also, I think we're seeing a good sign of good kind of a data point where you're seeing unwinding of short positions, slight build up of long positions, and that I believe could be added towards the positive set of data points which the markets had wanted, because now you're looking at almost 22-23% of open interest on the long futures for the FIIs as compared to maybe at 12% or 11% where we started off in the Feb series or ended the Jan series. So I think in that context, it's a good gradual build up towards the long positions, which we're seeing. The fact that we are holding on to that 25,500 to 26,000 range and the market breadth opens up, it gives you a perspective that the markets are looking at more of a risk on appetite. Now you look at the kind of sectors which have made a comeback, stocks which have made a comeback, you look at the volume push. In fact, the average volumes for so many of the stocks which have been moving up 10%, 15%, say on an individual day, has been one of the best volumes these stocks have seen in the last maybe 6 months to 12 months for in many cases. So it tells you that it's not just a price rally which matters over here, but it's the volume push and the participation which is increasing. That I believe is a big positive, and that tells you that breakouts of 26,000 mark, those round figure numbers are just a zone to look out for. But then these are sustainable breakouts, which I believe one should be looking out for.
So Kunal, sectorally, what's looking good to buy?
So I think now we are looking at a fresh round of sectors making a comeback. Realty has made a very strong comeback. You're seeing the banking names which have been very buoyant, of course, on the back of PSU banking names, and few pick up from the private sector banking stocks. Defense has made a broad comeback as such. You're looking at PSUs overall making a comeback. Energy space, which has done very well for itself. So I think there are many sectors. In fact, one of the other, so to say, smaller sectors as such, the capital market, space, space has done reasonably well. So I think there are a lot of pockets over here which have started to look very attractive, and the ones which have seen very strong breakouts for themselves. So it's now maybe a problem of plenty to try and pick and choose, but I believe that with this kind of sector breadth opening up, it indicates that we are looking at much more better options, a better risk appetite going forward.
Kunal, you said that if there's a momentum, then the index may go beyond 26,000, but there's a strong, resistance which is getting built up. The call writers are now, stacked up at 26,000 there. What would it take for the index to go beyond 26? Which are the stocks that will push them?
See, of course, you need large cap names to try and push the index up higher. But what happens, Sajid, is that if the markets were trading in a negative band, then you require some sort of a positive news flow to take out a resistance. But when you are into a very smooth flow on the upside, then you don't require too much of a big positive news flow. Those smaller pieces of contribution from news flows or individual stock specific, even though they are not the best contributor or the best weighted stocks, that also helps the indices to try and push past above certain resistances. So I believe that breaking past of 26,000 mark may actually not require too many large cap or heavyweight names to try and make a comeback. See, small short covering across few spaces, defense names, say private sector banking stocks, etc., could probably do the trick for the indices to try and break past about this 26K mark.
And the long positions in the market now, it's almost 22% actually. In the last 10 days, we have seen, long position really doubling. So the FI turn is coming in with respect to from short position to long, now 21% there. But do you think that's sustainable and they're holding on the positions?
Absolutely. So, what's happened is that the premium for the indices. So it's not as if that we've crossed the midpoint of the entire Feb series. at the first maybe 7-8 days of the start of the Feb series, you are at a point where the premium has dropped from 120 points to 60 points or 70 points as an average. Now, in that context, also the FIIs are trying to cover up their short positions, and that in a very gradual manner. And I think it's a good sign, because if the Nifty is trading into a band or a range, it gives more room for the FIIs or the ones who've been holding short positions to try and unwind the positions on a very gradual note. Otherwise, you'll have to do it in a hurry. And if you do it in a hurry, say if the Nifty climbs up 200 points or 250 points on an average for 2 or 3 consecutive days, then you are looking at a point where maybe the markets could be more consolidative. So the fact that we are moving in a very gradual kind of a manner, say a 50 points to 100 points uptick on the index on an average basis on a daily tick, that gives rooms for the FIIs to try and unwind the positions with not too much of damage to the existing shorts which they have built up.
Your picks for this morning, Kunal?
So focusing on different set of sectors, UltraTech Cement is something which looks attractive. In fact, the stock is perched very close towards its previous major swing highs. It's crossed hurdles of 12,500 to 13,000 levels. So would look out for 13,500 as a target for UltraTech Cement, and stop loss could be kept at 12,750. Torrent Pharma is also the other stock which is looking extremely attractive. In fact, the stock yesterday gave a classical sign of a breakout of a bullish swing pattern. So would look out for 4,200 as a target. Stop loss at 39.60.
Okay, interesting stock ideas there coming in from Kunal. On that note, we're going to take a very quick break. Come right back. We'll address all the